Alright, folks, good day. You're all welcome to our next video session of FX Papping Institute. Now, folks, last week we talked about swing highs and swing lows, how to identify them on the charts. Now, this video is going to be a continuation video of what we did last time, and I'm going to be really brief in this video. So last time we talked about swing highs and swing lows, the definition and why they form, and I also showed examples on the charts. So let's have a little recap of what we did last week. Now, folks, according to the textbook definition for swing high and swing low, a swing low is when price makes a low and is immediately followed by two consecutive higher lows. And I showed that as an example where the consecutive higher lows are uh, two, the consecutive higher lows are two bullish candles following um, the last bearish candle that forms that low. That is a swing low. And likewise for the swing high is when price makes a high and is followed by two consecutive lower highs. That is when you have a bullish candle and then it's followed by two bearish candles going down. And then last week we we showed this picture example, which I believe, as for those who were on my last video session, you really understand and you can now be able to identify swing highs and swing lows on the charts. So why swing highs and swing lows are formed? So I said a swing high and swing low is formed due to what is known as support and resistance, and I gave a definition for support and resistance. I said a support is a part on the chart where it shows the tendency or the struggle to stop falling, and then resistance is a part of the chart where it shows the tendency to stop rising. So, folks, I'm going to go over to new our new topic for this week. Now we're still on swing highs and swing lows, but today I'm going to be teaching you guys how to make use of the swing highs and swing lows in your charts. Alright, how to use swing highs and swing lows in your trading. This video is going to be really insightful and informative. So guys, before we go further, I would like you to subscribe to this channel and share this video, the link of this video, to your friends, okay? Because knowledge is power, and share this video to your friends. Subscribe, okay? Now, it's actually quite simple. So all you have to do is just pay attention, because like I said, this video is really going to be insightful. So we're going to go over to the charts and I'm going to show you how to be able to utilize these swing highs and swing lows. Alright, folks, this is the Australian dollar versus the US dollar pair. This is the 15-minute chart. Now, folks, please, I would like to say something. I said in my last video that swing highs and swing lows doesn't matter. It doesn't matter the time frame you're on, okay? It occurs in every time frame, from the 1 minute, 5 minutes, 15 minutes till the monthly chart, okay? it's available on all time frames. It doesn't have to be on any particular time frame, because swing lows and highs are just, we're just dealing with candles. Okay, so let's proceed. Now, today I'm going to be teaching how you're going to use swing highs and swing lows in your trading. Now, let's identify a swing high and a swing low. Now, let's start with this point here. Okay, this point here. Yeah, let's start with that point right there. This is a swing high, as you can see right there. That's a swing high. Now what makes it a swing high is for the fact that we have a bullish candle, and then we have, it's followed by two bearish candles down. Now folks, I want you to pay close attention to what I'm about to tell you, because this is really going to be helpful and useful in your trading. Now, I would have actually classified this zone right here as a swing low, but it's not, because it's not, there's no consecutive higher lows there, so it's not a swing low, it's just a regular low, it's just a regular support level. Okay, just a regular support level. But I want us to look at this candle here, this candle where this crosshair is. As you can see, after that candle was, after that bearish candle, it was followed by two bullish candles. These are your consecutive lower highs. And now, as you can see now, this here, this low here is a swing low. Let's just mark that out using our trend line. This low right here, that's a swing low. This is your swing low. Now, the purpose of this video is I want to show you guys how price reacts to these levels whenever price returns to them. Let's draw it out further. Now, take a look at this. Take a look at this. You see how price reacted to that level, because that is a proper swing. That is a proper swing low. Now, whenever the market gets to a swing high or a swing low, there is always going to be a reaction. There is always going to be a reaction. Okay. Now, this concept is still the same concept as support and resistance, because right here you can see how this support turned into resistance here. See how price really reacted at that level. Now, in case you're still finding it difficult to understand what a support and resistance is, now support, I said, it's where on the chart it shows a tendency to stop falling. This is a support. Okay, this is a support. Whenever you see the markets trending down and there's a struggle, that's a support. And then a resistance is when it shows the tendency to stop rising, the struggle. You can see that right here. This is a resistance. Show that tendency to stop going higher. Whenever you're seeing on the chart is rising, and then all of a sudden it showed the struggle to stop rising. That's a resistant level. So folks, now just take a look at how price really reacted to that level. Very clean, precise, and beautiful. Okay, now um let's go further. Let's look for let's look for more examples where price reacted. Okay, all right, folks, take a look take a look at take a look at this level right here, the whole of this level right here. Now this is not considered as a swing high. Okay, that is not considered as a swing high, but this is considered as a swing low, and this is considered as a swing low. Now in scenarios like this, I want us to take, now look at this swing high, your bearish candle, and then you have your two bullish candles. It's a complete swing high. Now I want us to take this level, the high of this bearish candle right here, the high of this bearish candle, and draw it out in front and see how price reacted to that level. Let's take the high of that level here, because that's a see how price reacted to that level. Are you seeing how price reacted to that level? Now the whole of this area here, what we did was, because this market broke higher, it broke higher, so what we did was we took the high of this swing low. This is the high, the bearish, that the high starts from the bearish candle of this move, which is this. You see the high right there, and then later price came back to retest it. Now this is a bullish move. This, as we know, is a bullish move. Okay, now we can also still do the same thing right here. Take a look at this point here. Take a look at this point here. This, remember this swing high we first marked out here. Now we can take the low of that candle, of this bullish candle. We take the low. Let's do that. We can take the low here, the low of this candle right here, and then draw it out. Now you can see how price reacted to that level as well. Okay, it doesn't matter, you can actually take this swing low. Okay, you can still take this swing low, this first swing low that we marked here, and this one. Okay, now the reason why we're actually taking this one right here, the low of this the low of the bullish candle, is because price broke this structure right here. Price broke this structure. So whenever the market is going to return to that level, there's going to be a reaction. Okay, there's going to be a reaction, and then this is where the reaction occurred right here. That's where the reaction occurred. You can see here too, this is where the reaction occurred. The market broke the structure here, and then it came back to retest. This is your retest. Look at it here. Market broke this structure. After it broke that structure, it came back to retest that zone. Okay, now folks, I want you guys to consider something. Whenever you're looking at swing highs and swing lows, price always gets back to a swing high or a swing low. Why I'm saying this is because whenever price breaks the structure, it's always going to come back to retest something, and it's always going to come back to retest that breakout. Okay, it's always going to come back to retest that breakout. Now let's move further and look at more examples. Now folks, look at this zone right here. This is a swing low. This is a swing low, which means whenever price returns to this level, it's going to really it's going to really be there's going to be a reaction. You see your bearish candle, and then you see your two bullish candles. This is your swing low. Then look at your swing high. This is a swing high here. This is a swing high. Look at your bullish candle, and then your two bearish candle. Now there is a break of structure. The price broke, it broke down. Price broke down. So now let's look at these two levels. Let's take the swing low, and then we're also going to take the low of this bullish candle at the swing high. We're going to watch how price will react to them, or if price is actually going to react to that level. If so, okay, I don't really think price actually reacted to that level. I don't think price reacted to that level, but let's advance forward. Alright folks, look at this small range down here. Take a look at this. Now look at this. This is a swing high. This is a swing high because you have your bullish candle and then your two bearish candles following it. Okay, and now look at the price broke this structure. Price went down, and okay, didn't really break it, but it formed an equal low down here, equal support. So based on the fact that, as you can see, this market is now in a bearish formation, we would now look at this candle here, the bullish candle. Look at this bullish candle right here, the one that makes this swing high. We'll take the low of that bullish candle. You take the low of it, and then draw it out and see how price reacts to it later on. You see that if you were a seller there, you would really be a part of this beautiful move. See that? Now folks, I want you to understand that you can also use the body of the candle as well, which is the open of that candle, and then you just draw it out. Okay, your entries can be either at the low of the candle or at the body of the candle. Okay, now you can see that your entry will be there, and then you see price going down beautifully. Now folks, that's for that. Now let's move further. Alright, now folks, take a look at this zone. The market broke this low. The market broke this low here, and there is a swing high here. There is a swing high here. Now, for the fact that this market broke this low, and then there is a swing high here, let's take the high. Let's take the high. Let's take the low of this bullish candle that makes this swing high, and you will see how price reacted to it. That's the low. Draw it out. and then boom. See how price reacted to that zone? This is a beautiful price action. Are you seeing this? This is a beautiful price action. Look at how beautiful price reacted to that level. This is really amazing. This is amazing. And folks, this is exactly how you're going to use your swing highs and swing lows. Whenever there is a break of market structure, whether bullish or bearish, when price returns to the high of the candle that makes the swing low, which is the bearish candle, you are going to be a buyer. And whenever the market breaks downward and you have a swing high, you're going to you're going to wait for price to return to the low of the candle that makes the swing high, which is the bullish candle. And once price touches that swing high, the once price touches the candle that forms the swing high, there would always be a reaction. But first of all, always wait for price to break the structure, whether down or up. Now look at this example right here. Look at this example right here. Now look at this zone right here. This is a swing. This is a swing low, and you can see price broke this structure. This is a resistance here, and the price broke this resistance structure. Now let's draw. Take the high of the candle that forms the swing low. You take the high and then you draw it out. See how price reacted to that zone. See it. See it. Now someone can be a buyer from here up to this zone right here. From here up to that zone right there. Okay, look at it. And then boom. Now I want to take us back a bit. Now look at, let me take off these lines. Let me take off these lines here. Alright, now look at this point. Do you know that this is a swing low? This is a swing low right here, because we have a bearish candle and then we have two bullish candles moving upwards before it now formed that swing high. This is a swing low. So we can also take, because price broke the low of that swing low, we can also take the low of that candle that forms the swing low, which is the bearish candle. You can do it both ways. Had even price broke this swing low higher, we would have taken the high. But because price broke this swing low, it broke it lower, we can take the low of it, we can take the low of this candle, and we can still take the low of this other candle that also makes the um swing high. Because as you can see, this low is close to this low, this swing low is close to the low of the candle that makes that swing high. Now if we draw out our trend line, you can see how price reacts to that level. You can see how price reacts to that level, right? See how price reacts to that level. So whenever a swing low is broken, take the low, of that swing low, which is the candle that makes the swing low. Take the low of it as your point of retest. Now if a swing high was formed before the swing low, then you can consider taking either the low of the swing low or the low of the candle that made the swing high. Okay, like the scenario that we have right here. The scenario we have here. Sometimes this might not even be a swing high, to just it will just form a normal resistance high and then begin to start falling. Okay, so folks, this is how it is played. This is how it is played. It's as simple as this. Okay, now back to this other example. I said i said that at this point here, as you can see, the market, this is a swing low. The market broke higher. It broke the high of that um candle that forms the swing low, and then you can see price returns to it, and then you see this nice delivery. So one can be a buyer at this level straight up to this point where the market came to retest, and you would have been rewarded handsomely. Alright folks, here are some more examples on utilizing swing highs and swing lows. This is the New Zealand dollar versus the US dollar. Now folks, take a look at this swing low here. This is a very very beautiful swing low, and as you can see, this swing low was broken and it began to progress higher. Now we take the high of the candle that makes the swing low, which is that bearish candle. We take it out, take it, and then we draw it out. Okay, now as you can see, price really reacted to that zone. So if you're a buyer there, there'll really be nice profits. Now look at this swing high here. This is a very beautiful swing high here. This swing high that you see right here. Now, based on the fact that this swing high was broken higher, it was broken higher, we are taking the high of the candle that makes the swing high, this high right here, and then you draw it out. Take it here like this. That's the high of the candle, and then you draw it out. You can also be a buyer there. You can see the opportunities price gives you. You can see the opportunities, beautiful opportunities. There's also this. Look at this. Look at this. Look at this swing low right here. Look at the candle that makes this swing low. You take the high, draw it out in future, you see what it will give you. And if you look here, you also have a swing high as well that was broken. You can take the high of the swing high. You can take the high of the candle that makes the swing high, or you can also take the high of the candle that makes the swing low. It doesn't really matter as long as the swing low is also close to the swing high. You can choose to take any one. Look at how beautiful that is. Now look at the high of the candle that makes this swing high. See that? It doesn't matter where you were a buyer. See how progressively it went. Very very beautiful. Okay, now folks, there's something I want to point out here. Whenever you're trading on, let's say, the 1 hour or the 15 minutes or the 30 minutes time frame, always be considerate of what you have on your daily time frame. Follow the market. Okay, if you're bullish on the daily time frame, whenever you enter into your 15 minutes or your 1 hour time frame, always look for only bullish entries and nothing more. Okay, now look for swing highs and lows. Look for swing highs or swing lows that will be broken in a bullish form. Okay, now all you have to do is wait for price to come back to the high of the swing low, or maybe to the high of the candle that makes the swing low. Okay, and then price would retest there, and then boom. Okay, it's very very important to note that out. Let's see if we can do a few more examples before. Okay, okay, okay. From here, the market just started going higher, 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 and higher. Now, guys, I have to say something. Whenever you place, whenever you place, whenever you place a, whenever you are waiting for a swing high or a swing low to be retested, most times it won't be retested. Most times it will be. Okay. So all your job as a trader is just to wait for price to break the level and then return to it. Once price returns to that level, you are going to be um, anticipating the move. Okay, so as we go further in more video sessions, I'm going to really teach you guys how to understand breakouts and also retesting, the concepts of breakouts and retesting. And I'm also going to show you how to identify a false break and a true break. So folks, until next time, until next Saturday, I wish you good luck and good trading.